Hi students, so coming for this video we are going to go for question 3. This is with a discount. So in the previous video we had come across issue of shares at premium. So here we are going to see issue of shares at discount. So in each video we are going to go for different methods and ways that has been preferred by the company. So let us see. A Company Limited issued 5,000 preference shares. Just observe. In the previous video we had come across just shares. In the first video we had come across related to equity shares. So here it is preference. So whenever you find preference or equity you have to add this word, okay, in all the entries. So let us just observe now. 5,000 preference shares of rupees 100 each. So the face value is 100, but it is at a discount of 10% allowed at the time of allotment. So at the time of allotment they have issued it at a discount. Okay, then the net amount payable is as follows. On applications it is 20 rupees. On allotment it is rupees 20. On first and final call it is 50. Now just observe, 100 rupees is going to be the face value. 10% discount on that will give you 10 rupees. Okay, take the calci and just try 100 into 10%, you'll get 10 rupees. 10 rupees is a discount, so it will be 90. So 90 rupees is what the complete shares are going to be sold out. 10 rupees is a discount. Now this 90 rupees should be equal to the calculations which is given here. Applications 20, allotment 20, first and final call 50. So it is equal to 90. That 10 discount, okay, 10 rupees of discount will be shown under allotment because they have given allowed at the time of allotment. Next, all the shares were subscribed and the money was duly received except the first and final call on 100 shares. So here we have cancellation entry, which means forfeited. Then the directors forfeited these shares and they reissued them at rupees 70 per share past the journal entries. So now this is with a discount. So let us see what will be the changes that we are going to come across. Coming for the solution now, just observe journal entries in the books of A Company Limited. I have already entered the name of that. Now let us go for the first entry. First is what? Application money received. Bank account data 2. We are supposed to make a change. It is not share, it is preference share. Preference share application account because we have the preference share issued. So what is the number of shares given in the question? 5,000 at rupees. At the time of application it is 20. Just observe and you have to know this. 20 for application, 20 for allotment. So into 20. So what is the value we get? 5,000 into 20 gives us 1 lakh. The narration is already done, being application. Second entry, that is transfer entry. So it's going to be the same. What is credited here? To preference share application account, that is going to be debited. Preference share account data to share capital account. So we are going to take up the value what is actually received and just transfer. Being application money transferred. Could you all just observe? Preference share application account data to share capital account. See, only this word will keep changing. If it is equity, equity. Preference, preference. If nothing is given, it's very simple. It's only share. Okay, next. So we have completed application entry. Now moving on to the allotment. Under the allotment, observe, we have discount given. So we have to observe in this. So it's going to be preference share allotment account data discount on issue of shares account data to preference share capital account. Now just observe, this is going to be the highlighted here because this is related to discount. So preference share allotment account data, discount is to be taken and allotment. So we are debiting discount. Very simple. Keep this in your mind. Premium credited, discount debited. There is only a difference. If it is premium, security premium, you will credit it, that is after share capital, but if it is discount, it will be debited. Clear? Okay, now let us go for the calculation. 5,000 shares at rupees 20, allotment rate is 20, whereas discount 5,000 into 10, we have to calculate. See, this 10 rupees comes based on your face value of the company is 100 into 10% of that discount is 10 rupees. So you have to calculate and show it as a note, okay, in the pencil. So that value is 10 rupees discount rate. Now we have to just take up the total. 1,50,000 total is 1,50,000. So we have completed this. Being allotment money due, it is at a discount. Now let us go for the next entry. So allotment money received. So when it is received, bank account data to which money is received? Allotment to preference share allotment account. So bank account data to preference share allotment account. Here we are going to take only the preference share allotment account, what is being debited, and allotment word, could you all see, it is 1 lakh. So that is what we are going to take here, because discount is never ever received by us. Just observe, it's only allotment. Okay, being allotment money received. Now moving on to the next. First and final call account data. Going for the first and final call, just observe 50 rupees. You have to keep this in your mind. So it's going to be preference share first and final call account data to share to preference share capital account. The word preference should be mentioned. Preference share first and final call account data to preference share capital account. So here the same 5,000 into what is the rate of that? 50. So you have to take up this value now. It's going to be 2,50,000 being first and final call money due. So the due entry, there is no changes. It's just same. Only the word of preference would be added here on the calculation. Yes. Okay. Let us go for the next students. Going for the receipt entry of first and final call. Now bank account data, we are receiving first the money. Let us go for that. So it's going to be, are we going to receive completely 5,000 shares? No, we have something holded on. There is something called as you have given, except the first and final call, 100 shares have been holded. So you have to show that 5,000 shares minus 100, so you get 4,900. For 4,900 only we are receiving the value. Okay, 4,900 into 50 rupees gives you 2,45,000. So what is the calls in arrears? Let us just check up. 100 is the arrear into the same 50. So you get 5,000. So it's 2,50,000. Just observe, 2,50,000 is the first and final call money due amount. In this, received is 2,45,000 and arrear is 5,000. I guess you all got the complete picture. Yes. So let me mention you. Bank account data, 5,000 is a complete value issued, but 100 is being holded on, which means arrear. So 4,900 only we are receiving first and final call money. So what is not received? 100. That is 100 shares, 4 rupees 50 each. So 5,000. So it's being first and final call money received. Yes, next. Going for the next entry now, we are going to go for the cancellation entry. This, because of this 100 calls in arrears, we are going to cancel. Preference share, capital account data. Two. We have discount here because discount is less than the face value. It is within the face value. For the face value they have given discount, so you have to show that discount, which means here could you all find in the allotment, and the allotment discount is debited. So when you're cancelling under cancellation entry, you have to credit it to discount on issue of shares. Then to calls in arrears account, to forfeited share account. Now observe. Let us go for the calculation. 100 shares at rupees. What will be the face value? I said face value, we have to take 100 rupees as a face value. So discount is going to be what? We have to show 100 shares at 10 rupees is the discount which we calculated, right? On 100, 10% is 10 rupees. Then calls in arrears rate. What is the calls in arrears? 100 into 50. So what you have taken there, the same you have to copy. Now going for the forfeited cancellation. We doesn't know how we are going to take it. Now just observe. 100 is a face value. In this, 10 plus 50 is 60 rupees. If you minus 60, you get 40. This is how we are going to take up for the calculation of forfeited or cancellation. See, under cancellation, 7th entry cancellation, everything will be only what is the arrear share which is holded on, which was not paid. With this, you have to take the rates. Share capital always face value. If it is 10 rupees, take 10. If it is 100, take 100. Based on that, each rates will differ. Clear? Now let us go for the calculation. 100 into 100 gives you 10,000. Discount 1,000. Calls in arrears 5,000. And forfeited is 4,000. Observe 1 plus 5, 6 plus 4, 10, which is equal to 10,000, right? So this is what? Being unpaid shares forfeited. Just observe. Now moving on to the next entry. Reissue entry. Now let us go for the question and observe once what is the reissue rate. It was reissued at 70 per share. So 100 rupees we have made the forfeited entry. It's completed. Now reissue entry is going to be taken up rupees 70. Now coming for the reissue entry. Observe first what is going to be received by us by the company. Cash. So it will be always through bank in case of shares. Okay. Bank account data. 100 shares are reissued at 70 fully paid. So it doesn't know what is forfeited. We have to check it up. So let us go for the next. Is it share capital? It is preference share capital. So we are going to take your 100 into 100 is a face value. So what is the difference given here? 100 into 30. 100 minus 70 is 30. This is how we have to take. Clear? This is very simple, I guess. It's going to be 7,000. Okay. Bank account data, just observe what is credited will be debited here. Forfeited share account data, what is debited will be credited. See, in case of reissue, there is no discount. Discount will never be shown. Clear, students? Okay. Now we are going to take up bank account data, forfeited share account data to preference share capital account. Now the value of this is 3,000. So the total of this is equal to 10,000. See, the total of this and this should be matched. It's equal. Being forfeited shares reissued. Next. Now the last entry. Forfeited share account data to capital reserve. What is the value we have to take up? Just observe. Go for the 7th entry. Could you all find what is credited here? Forfeited share value is 4,000. Take that. 4,000. You should take only the value, not the calculations. Next. Reissued. Could you all find it is debited? What is the value here? 3,000. Take that. 3,000. So 4,000 minus 3,000 gives you 1,000. 1,000 is going to be your benefit on reissue of these cancelled shares. So being balance transferred to capital reserve account is a narration. Observe, students, it's very simple, very simple. So let us just observe from the beginning once. Application money received entry. Next transfer entry. Next allotment. Discount, observe it is always debited. Next receipt entry of allotment. This you should always choose the allotment column. What is the value? That is what we are going to receive. Be very alert when you are going for the value to be written. Receipt value. Okay. Next. First and final call. Due entry. Next. Receipt entry of first and final call. Next, cancellation entry. See, only when discount is there, this will get affected, students. when you have discount, this will get affected in the cancellation entry. Apart from that, nothing else. Next, reissue entry, and then the transfer entry.